Hello and welcome to Donatien Investment. This analysis is for Powell Industries on NASDAQ as of 16th of July 2026 with a share price of $235. The full report is on donatien.ca, Seoul, a superb debt-free maker of the electrical backbone for data centers, but priced at roughly twice its warranted multiple, so a hold until the price comes to you. Powell Industries scores 82 on quality. It builds custom medium voltage switchgear and power control systems, the electrical backbone of refineries, LNG terminals, utility substations, and now hyperscale data centers. It is essentially debt-free, with a return on invested capital near 24% against a 9% cost of capital, and its backlog is a record $1.8 billion, up 33% year-on-year, with new orders up 97%. It landed a $400 million data center order, the largest in company history, with revenue visibility out to fiscal 2028. This is a genuinely excellent business, which is exactly the trap, because a great company is not a great investment at any price. Valuation scores just 30, and this is the crux of the call. The stock trades at about 46 times reported earnings and closer to 49.5 times once you strip out non-operating interest income, against a warranted multiple near 23. That is roughly twice what the fundamentals justify, and it sits above the industrial's guardrail even a year out on forward earnings. The shares have re-rated hard on the electrification and data center theme, from a 52-week low of $69 to a high of $328, and now sit near $236. At that price, the market is treating the data center order surge as a permanent step change rather than a cyclical spike. Timing scores a weak 42. The monthly and weekly trends are still up from the big re-rate, but the daily has rolled over below its 50-day average, near $281. Momentum has turned negative, and the stock fell 4.5% on the day of the report. None of the three entry paths are open, so the conviction ladder reads, wait. And unlike some expensive names, there is no analyst cushion here. The consensus target of 237.67 sites right on top of the current price, so the tape offers no implied upside to lean on. The cleaner entry is a tested bounce off the 223 shelf, or a reclaim of the 50-day on volume. The main risk is the same multiple working in reverse. The bear case takes the stock to $150, a 35 to 50% derating as a 46 times multiple compresses back toward the 23 times warranted line, even if earnings stay flat. The live triggers are a stall in data center and utility order intake for a couple of quarters, or a flagship mega project bid lost to a giant like Eaton or Schneider. But this is a hold, not a short. The quality, the record backlog, and the secular data center tailwind are all genuine. The balance sheet is a fortress, and the growth is proven and durable, so the sensible move is to wait for a better price, not to bet against the business. Now weigh the risk against the reward. The bull case is roughly 40% above today, the base case the most likely about 2%, and the bear case a fall of about 36%. So you are risking about 36 to make 40. So, our call on Powell Industries on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.